Okay, I'm just going to run through the process, like I don't even need a time frame. So immediately from what I can see, you just tapped into a daily supply zone and then you did a 3 drives pattern into the supply zone. So that is a distribution pattern. And in the process, you have also broken structure over here, right? This is a break of market structure. So at the moment, you are retracing back up to form, if you guys can picture this, you know, this is sort of like the head, that's the shoulder. And right now you're going to form that other one right there. And that's the way I'm looking at the markets at the moment. Like immediately this strikes me as that. So for MATIC, I'm going to be looking for some kind of a retracement, retracement area for me to get into, get into a short. You could say that the 0.5 is a really good area to get into, but otherwise the golden pocket is always the best. So now that we understand on the daily, we are probably looking bearish compared to bullish. Like sure, it might break this structure, like right now, it might do that. But based on immediate daily structure, it can be safe to assume that after distribution here, and you got to break the structure, and currently you're getting some kind of a heads and shoulders formation, the probability of price going heading downwards is higher. So this is how I look at it. And then let me just mark out some key levels on the daily chart before I go into a lower time frame. So over here, you have relatively equal lows on the daily. If you draw a fib here today, you can see that there is a lot of value, there is a lot of support in terms of the golden pocket. So if it goes into, say, this area, this is what you call a demand zone. In fact, let me just write it out. Daily demand zone. So this is an area where we can look towards. 0.5 definitely going to provide a target. This one is the key level that it's probably going to target. Like if it gets rejected here, the first level it's going to take out is here. In the process, it's also going to take out this level. So that's the daily key level. And I'm expecting some kind of a bounce after it takes out the key level. Treat it as liquidity, right? It's just liquidity. So it just so happens that that low there is right below these equal lows here. So when the price takes this level out, people are going to be like, okay, you took this level out. But what the market makers are going to do is they're going to wick it just below this level because there is liquidity there, right? So they're going to make it seem like they're taking out this level when in fact they're just targeting that level. Like mark my words, that's probably what's going to happen after it gets rejected. Okay, so now we will also mark out this level right here as daily key level to confirm bullish structure, which means if price breaks this level, then, you're bullish. This is daily supply. And over here, this previous high here is the level that price will target if bullish. You can also say that this is an order block, right? So that's daily, right? We understand that this is probably just a retrace to first a short and go lower. So now we can go into the 4-hourly and try to map things out a little bit clearer. Immediately, you can see that the 4-hourly chart has just taken out this high, which means if you wanted to short, this would be a good level to short. Now, if I go do this, you can see that this high just happens to be above the 0.5 fib. In any given range, there is anything above the 0.5 fib, which is basically here, is known as a premium, which means if prices stay within that range, then this area is where you look to sell. And over here is known as a discount. Anything below the 0.5, that's where you look to buy in a range. And the reason why I describe it that way is because these algorithms are programmed to keep the market in equilibrium. So equilibrium basically just means that, it doesn't want to be in a premium for too long without bringing it back into the mid-range. Similarly, it doesn't want to be in a discount for too long without bringing it back into the mid-range. So usually a really good place to start, a really good place to look for key levels is within a single range. You want to look for the 0.5. Most often you will find a swing high or a swing low directly above or below the 0.5. Below for the case of longs and above for the case of shorts, as you can see right there. So if we looked at this chart just 15 minutes earlier, we could have caught this short right here, and this would be a perfectly valid short. And most of the time, gonna get, quite a nice retrace. But is there any other levels that I might want to look at when it comes to shorting? And immediately my eyes are brought to this supply zone here. In fact, probably not even supply. I can narrow it down to just this order block. I would even say I would set an alert heading into this order block. When it comes into here, I'm going to look to short. And it just so happens that this order block lines up with the 0.618. So roughly around this area, I'm going to look to short. Of course, set alerts, not limits, because there is a chance that it might go for the relatively equal highs above here as well. But you get the idea. Right, now that we've identified areas of value where we can go in, which is right here, or right here, we just simply set limits and we just wait. I mean, you could enter here if you want to, but like based on the higher time frame, we already know what this, like if you short here, we already know where it's going to target, can it? Like, which is at the very least, I would say it's the relatively equal lows over there. Go into the 1 hourly, should be a similar story. Yep, exactly similar story. There's nothing that I would really change about this. So yeah, that was a mapping out market structure and key levels for MATIC. Was that insightful to any of you?